Your salary slip, is it just a page of numbers or is it a hidden roadmap to your financial freedom? Let's decode it together. What if I told you that a large part of your take-home pay and the very key to your financial planning is hidden within the secret of these allowances? Salary allowances are fixed, regular payments you receive on top of your basic pay. Their purpose is to compensate you for the rising cost of living or for needs related to your job, like working in challenging conditions. But this brings us to the most important question. How are they taxed? The Income Tax Act has one fundamental rule. The law states that every allowance is fully taxable, unless a specific rule explicitly grants it an exemption. This means that your dearness allowance, city compensatory allowance, overtime allowance, and medical allowance, the full amount of these without any deduction, becomes part of your gross taxable income. But this is where professional knowledge becomes true power. Some allowances are partially taxable, and this is where you find a golden opportunity to save tax. The biggest and most important example is the HRA, or house rent allowance. If you live in a rented home and pay rent every month, you can save tax on your HRA. But to do this, you must meet these essential conditions. First, you cannot be the owner of that property. Second, you must be actually paying rent. And third, the rent you pay must be more than 10% of your salary. The tax-free portion, or your exemption, is the lowest of these three amounts. The actual HRA you received, the total rent you paid minus 10% of your salary, 50% of your salary if you live in Delhi, Mumbai, Kolkata or Chennai, or 40% for any other city. Now the word salary here has a very specific meaning. It includes your basic salary, the part of your dearness allowance that counts towards retirement benefits, and any fixed commission based on turnover. Correct information leads to correct savings. In the same way, children education allowance is tax-free up to 100 rupees per child for a maximum of 2 children every month. For hostel allowance, that limit is 300 rupees per child. There are other allowances too, like for your uniform, travel, or a helper. These follow a simple spend it to save it rule. This means the amount you actually spent on your official duty is tax-free. If you didn't spend the full amount, the leftover portion is added to your income and becomes taxable. This information is not just about saving tax. It makes you financially literate, empowered, and in the truest sense, self-reliant. When you understand your salary slip better, you control your finances better. This knowledge is the foundation of trust and transparency between both employers and employees. Every part of your hard-earned money matters. Mastering these rules is the first and most powerful step you can take towards building a truly secure financial future. Make your financial knowledge your true strength.